What is up, guys? Dirk here, 15 June. It is Thursday, so let's do an update after we've just got the news that the Federal Reserve actually paused. So they didn't increase. It's the first time in many months, in many meetings, that they did not increase the interest rate hikes, or the interest rate, sorry. And they're saying there is potentially two more that are coming. So first of all, my theory is that we don't get a global market crash until we get at least the first rate cut, and probably 6 to 12 months after that. If you go back in history, I've done that in the past. I'm not going to do it again now. But basically, global market crashes like 2001 or 2008, they only happened 6 to 12 months after the first rate cut, after a hiking cycle. So hopefully that's going to be the case here. We have got a pause, but that is not a cut. If we're going to get more increases later in the year, that means that a potential global market crash could still be quite a way off. Hopefully that's going to be the case. So if we go and look at what Bitcoin is doing, it's currently trading just under $25,000. And I did make a video a couple of weeks back where I said we're probably going to hit 23,000 first before we hit 32,000, and that still seems to be something that could be developing. But what we have here potentially is also kind of a similar pattern that we had here earlier in the year. This is the 4-hourly chart here for Bitcoin, and you can see we had a similar type of declining wedge here where it went down in the wedge for a couple weeks. Then we had the drop here, obviously on some FUD. I think that was with the banking collapse at the time, and then a rocket higher. And we're seeing something similar here potentially, where we have this declining wedge for the last like 2-3 months. Now we broke down to the downside of the wedge in a similar way here. The Fibonacci golden pocket of this entire move, as you can see, is roundabout over here, somewhere between 24,000 and 23,000. Now if we change this to a weekly chart, same drawings here still, and we add on the 50 simple moving average, you can see that is also approximately here, about 22,500. So there's a lot of confluence here. I think this 50-week moving average is the line in sand for me. We don't want to see a new weekly close below there, because then we're quite potentially going back to the lows or lower. But if we hold this 50-week moving average, it could wick below there, sure, like a wick, as long as the body doesn't close below that. I think we're good for the bulls. I have been expecting May and June and even July to be a correction/chop month. I do think that's going to continue also. So we do still probably have a few weeks left of that. I think it would be a very good thing if we hit this area somewhere here between, say, 22 and 24,000, form a base over there, and then hopefully towards the end of July, maybe in August, start a move up, a continued move up in a similar way that we saw over here, a big green weekly candle or a couple in a row, and just continue to move higher past this high, 32,000, maybe 35, which is still the CME gap. And potentially after that, if we do really get a run into the halving, which is happening in around about April of 2024, then we could be looking at that 48,000, maybe $50,000 level, potentially somewhere within the next year or so, maybe even this year. Who knows? But one step at a time. The most important thing is that this level is going to hold, and this 50-week moving average ends up holding as support. Now a quick look at Ethereum, still holding that short trade. Remember, I made a video here early May, so that's about 6 weeks back, breaking this trade down in real time, where I showed we were looking at a potential range setup here. We got the sweep, we dropped back into it, we got almost perfect entry on the short. And so far we have seen quite a drop over here. Now the interesting thing is that while this is still in play until it's not, we are approaching here potentially the Fibonacci golden pocket of this move, as you can see. And we're going to have to wait and see if that's going to provide us with a bounce or not over here. But this does look a bit heavy to me, and we could be going lower, in which case the middle of the channel would probably provide support still here. If we change this to a weekly chart also, just to see where is this 50-week moving average, you can see that's roundabout over here, about 1560. Would be good if that holds. If we can bounce from there, that would be really nice for the bulls. Seeing a weekly close below this 50-week moving average in the same way would be pretty bad, I think, and hopefully we're not going to see that. But if it does, I mean, we have the middle of the channel and potentially, if this whole setup plays out, it could be targeting the lows, right? That is theoretically the goal or the target for this setup of a range setup. If it was a 5-minute chart or 1-hour chart or a 4-hourly chart, forgetting what it is, and you know that this is a big chart here for Ethereum. If you see a setup like this, you know, decent chance it favors hitting the opposite side. So we'll have to wait and see. That's why I say line in the sand kind of over here. Let's hope we don't get a new weekly close below that 50-week moving average, because if we do, and there might be potential, I don't know what the chance is percentage-wise, nobody knows for sure, but ideally we want to see it hold here and bounce. If it continues lower, well, you know, at some point there is potential that it could actually go back to these lows again, and obviously we'll take that a day at a time and a week at a time, and I'll update if there has been a breach of this key weekly moving average and what the charts look like. For now, macro, we're still bullish. I mean, we're above the 50-week moving average, but we're going to have to find support soon if the bulls still want to have a chance. So hopefully you enjoyed this update. Smash the like button, subscribe if you haven't subscribed yet, and I will see you in the next video.